Hey everybody, this is Jim at SP500chart.com. It is 5 o'clock p.m. here on the nose, here on the East Coast, and it's time for our a video for May 7th, 2013. Before we do it, I need to remind you that the website and the video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I control lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I'm not a licensed financial professional, just a guy that draws lines on charts. Well, today comes as no surprise. The markets were up. What's new? And, you know, it could be that we are looking at a target that is much over this 1600 line as this little dip is right here. That's quite possible. If that's the case, all you can do is hang with it. So this is really quite a turn of events. At least I thought we may enter a period of selling with a tag on 1600. But you always have to defer to what the market has in mind. And clearly in this case, it is more upside. The good news is we have yet to trigger any kind of sell level. We almost did back here. But thankfully, when we saw this little inverted head and shoulders pattern develop back in the middle of April, we knew that would likely be the end of that sell-off leg, and it sure was. Now, there are a couple things that I think we can add to this chart, and some of them are going to be a little almost contradictory to some things that I've said, possibly. What I want to do is I want to add this new line right here, excuse me, that connects our last two lows that were hit before a rally ensued. So let's make this a different color. Let's make it green. I don't think we got anything green on this chart. We're going to do that. Let's also add this in parallel. Just because, things for some reason like to work in parallel. So let's see if this channel has any validity to it. So far, we've got 1, 2, 3 touches on the top side and 1, 2 on the bottom side. Additionally, when we look at a 5-minute chart, I did have just a horizontal line right here, thinking that we need to watch that to see if we break down. But with today's added data, we can now forget that horizontal line and look at the last 3 days as having conformed to a gently sloping narrow channel. So those are the two changes that I think we need to make to this chart. No sign of a top yet, guys. It's just not there. At some point it will be, but it's not there. When we broke out over 1600, that really, to be honest with you, kind of threw out the idea that 1600 was going to turn the markets down for obvious reasons. But also, when we were looking at the potential of a double top here, and I'll remind you, that's one of the dangers when you're in an ascending market. When you're in a bull market, there are multiple opportunities to think you may be at a double top. And when you're in a rising channel, almost every peak that was previously set at some point gets equaled along the way to setting a higher high. So in other words, if you're zigzagging up a channel, each time you zigzag down and then get part the way up, you're going to match the high that was previous. So here was our previous high at about 1597. We came up to 1597. Was that a double top? Well, no, it wasn't, because we did not come down and take out 1540. And I'll remind you that double tops are only confirmed as double tops, and this is by the textbook. Okay, I'm not making this up. This is Technical Analysis of Stock Trends, first edition, Edwards and McGee. You confirm a double top when you take out the line that supported it at the lowest point between the two tops. But obviously now the markets are saying, hey, let's keep going up. Now, I still think this line should be viewed suspiciously as resistance. So we got two things working here. We have this little channel. We have now what I believe may end up being a larger channel. Let's extend these lines on out here a little bit, particularly this one, because this rising line and this blue line have a date on the 21st of May. So at that point, either the market rallies up above this line or it falls down underneath this line. My vote, my gut feeling is, because we've seen this line work for longer as a resistance line, my feeling is if we get up to this area, I would be prepared for a downside break of this green line. But then I would be looking either to the yellow line to provide support, or this line that right at about 1600. So right now let's do this going forward. Let's watch this little channel here. See if the S&P can stay in this channel long enough to reach this blue line, or it could pop out of it, but upon reaching this blue line, let's be prepared for that to be a short-term top. But that would be additionally confirmed by the breaking of this new rising green support line that defines the trading over the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. The last 15 days have fit pretty nicely between these two lines. So let's just see if we now have a little bit better gauge of where we start to see potential weakness. Again, I'm just kind of wide-eyed over here saying we need a breather. This market needs a breather. I want it to get a breather, okay? I think it needs it. If it just keeps going up like this to 1700, then when things do go south, they're probably going to go south in a hurry. It would be more healthy. Look at the length of this rally. Let's see how long this is. This is the last thing I'm going to do on this video. I'm going to draw a rectangle from the beginning of this rally to where we are today. We are way longer than the last rally, and we are as long as that impressive rally that kicked off in October of 2011. Let's see how we stack up with 2012. Well, we're nowhere near that one. But you can see that for right now, if we look at the last 3 rallies, this is as long as that nice move off of, where was it? 1080? All the way up to over 1400. So it sure looks like we need a breather, but the good news is, even though we haven't gotten it, eventually we will start to see some signs in these channels, and potentially in some patterns that will give us a clue that we are ready to reverse down and take a little hit to the markets, but a necessary thing in order to keep things rolling. Because if this bull market, it is now, I think, I would call this a bull market. I don't think at this point we can say are we still in that secular bear? Well, S&P at new highs, Dow Jones Industrials at new highs, Dow Jones Transportation Average at new highs, Russell at new highs. The only thing that's not at a new high is the NASDAQ. So that's the video for today. Let's just see what happens going forward. Thanks for watching. And I want to especially thank you for your support. Take care.